Brigade Enterprises is the next company that we're speaking with. They've registered strong growth in residential real estate and the hospitality segment. Well, there was some softness in the commercial segment. Pavitra Shankar is Managing Director, Brigade Enterprises, and she's joining us now, as always, to talk about the earnings, but more importantly, the outlook going forward. Pavitra, good morning. Good to have you with us here. Prashant this side. So let's just talk some numbers, if we can, straight off the bat. 4,100 crores of pre-sales in FY23. Could you tell us what seems likely doable in FY24? Volumes have seen a big jump, 4 million square feet to 6.3 million square feet. Again, in FY24, what can you do? Go on.
Hi, morning, Prashant, and to everyone at CNBC and watching. Thank you. We've had a fantastic year. We're really proud of the performance of the residential and the hotel segments for Brigade. On the residential and real estate side, sales have just been extremely good. We had done about 4 million square feet in the first 9 months of the financial year that just passed. We knew that Q4 would be a heavy launch quarter, and it was. We were able to sell over 2.5 or more than 2 million square feet in the last quarter. So overall ended up at 6.3 million, which is a 36% jump over the last year. So the residential segment is doing extremely well. The demand on the ground is still fantastic, despite all the concerns about interest rates or job layoffs or whatever it may be in the IT sector. I think on the ground, the demand is still very good in our target markets of Bangalore and Chennai. So what we expect for the coming year is that the trend will continue. Of course, it needs to be supported by launches across our portfolio, and we're working hard to achieve that. It looks like many of our launches will again get staggered towards the second half of the financial year. But right now we will be working on selling the project that we just launched in the last quarter. And we have inventory across plotted, affordable, mid-segment, and high-end. So I think we're seeing very good demand across the entire spectrum of the portfolio. Hospitality also did extremely well. Sorry, go ahead.
Yeah. No, sorry. So on top of the 36% growth that you mentioned, which is, very, very strong, what can you do? If you can put out a number in FY24.
Yeah, we will look to beat these numbers. I think it is very dependent on launches coming in, which is why I'm not so, keen to give a number on that, and we don't really give guidance. But what we aim to do is to grow and show a consistent growth of 20% to 25% CAGR. So far, we have done that, and this year FY23 has really pushed us in that right direction.
Launches a problem, Pavitra, if you can just kind of pick on that. Is it, we had another real estate company about a month and a half back saying that, well, the demand is strong, but we've got to be able to put projects together and launch them. And that there is maybe at the margin some, delays and issues, etc. But could you comment on that? Go on.
Sure. So we have a very good land bank. With our land bank, we have the potential to develop over 40 million square feet. So it's not that the lands are not there. It's a question of getting through the design and approval stage. We're doing that across the portfolio, but of course, difficult to exactly peg when it will happen, which is why we generally give a number that's on a rolling 4-quarter basis. So based on that, we're looking at around 7.5 million square feet of launches in the residential sector for FY24. So yeah, I think it is just a question of getting them out there and making sure that nothing disrupts that process, which can be a little unpredictable. There are so many factors at play here. But what we are very confident of is once the launch hits the market, it does get absorbed very well. Of course, it's a balance of, I think the game itself has changed today. The launches tend to be the main part of the project sales life cycle. So it's a question of how fast can you launch and how much can you sustain during the course of that launch period and then through the end of the project life cycle.
And your target is 7.5 million square feet of launches for the residential sector in FY24. Pavitra, hi, Reema here. Can you talk about the commercial segment? We've seen a drop in the volumes, both on a quarter-on-quarter and on a year-on-year basis, and even in value terms. What's the reason behind this?
On the commercial leasing front, there isn't any issue actually. In fact, the leasing portfolio income has grown. We actually did 1.2 million square feet of leasing in the past financial year, which is a very good number considering our inventory is all SEZ. Post the sunset clause of the SEZ bill, it has been a challenge to lease. But we have two fantastic projects, the World Trade Center in Chennai and Brigade Tech Gardens in Bangalore, that have seen very good uptake with high quality clients. So on the leasing front, we don't see an issue at all. On the commercial sales front, again, it's a very small percentage of the overall portfolio. So it could just be, based on when the sales are getting recognized, and the revenue tends to get recognized for that. The commercial sales segment depends on revenue recognition. So it's a little different from when the bookings happen and when the revenue actually gets recognized, which is on the registration of the property.
So it's just a timing issue. It will pick up the commercial sales. Okay. Would you look at putting any of your commercial assets in the form of REIT, something that your peer Prestige did with Blackstone? Are you looking at that option?
I mean, it's always an option that's out there because it's a way to monetize the portfolio. Today, Brigade has 8.5 million square feet of an operating commercial portfolio. I think we would need to grow that portfolio a little more and have a higher sort of overall, rental income before we can think about putting things in a REIT. That said, it is always an option. It is something that is on our minds, and we will work towards it if we feel that is the best way forward for the portfolio. But right now, it seems a little premature because we need the size of the portfolio to get a little larger.
What's the appropriate size before you can consider a REIT? I think you said you're at 8.5 million.
Yeah, so we're looking to grow that to about maybe 10-12 million square feet. That'll take a couple of years to do that. And that space has to get leased as well.
Okay, so maybe a couple of years and then we'll talk about a REIT, right? Pavitra, just on the hospitality segment, right? The occupancy, I think, came in at just under 70%. What can this go up to in FY24? What are average room rentals looking like? Are you adding more capacity? How many keys are you at there in that segment so far? And just give us some details for 24.
Yeah, so we're a little over 1,400 keys. We are 8 operating hotels across 4 different cities. The portfolio has done very well, like you said, just under 70% occupancy. We at 69% for the financial year. For the financial year, the average room rental was just over 6,000, but in Q4, which is of course the recent Jan, Feb, March quarter, the average room rental was actually above 7,000. So I think we're seeing a very good upswing in the hospitality sector, supported by international travel coming back, corporate travel. There's a lot of banquets, F&B events. So across the board, doing very well. We are doing some amount of CapEx. We have about 60 crores of CapEx to spend on a hotel in Mysore. It's an Ibis Styles in Mysore and about 120 keys. Mysore, while it's a small market, has actually done very well right through the pandemic. So we expect that hotel to also do pretty well. So over the course of the financial year, I think we will see occupancies grow. But also it is a question of, increasing room rentals and occupancy, because what we like to look at is a RevPAR metric, which shows the total revenue for the hotel versus just pushing only rates or only occupancy.
All right, Pavitra, we'll leave it there. It's always a good conversation. Thank you very much for joining us, and good luck to you, to your team, from all of us here at CNBC TV18. Thank you.